Hi guys, welcome to Gold Price Daily Analysis. Today is Thursday, 23rd of May 2019. This video is brought to you by the coach. Remember always, our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. I do urge you to check out the description of this video for the link of the Telegram room. At times when there are important updates to be delivered to you, I could be able to do it through the Telegram. Also, I do urge you to watch our last two videos in order for you to get the best of this video. We are going to start our analysis right after a quick recap. On the last trading session of Wednesday, we have been waiting for important economic headers to be released from the United States. Our attention was actually on the FOMC meeting minutes, and we've been anticipating some volatility to be created once those minutes are released. Unfortunately, we did not get the volatility that we've been looking for, and the gold took the minutes in a negative way or a negative tone somehow. For the gold price action today, gold was in the supply most of the day and traded for a long time below 1,275. There was some sell-off in the equities. Gold made it to 1,277 and then back to 1,273 plus. In our last episode, we advised sellers at the highs above 1,296 to partially close a part of their positions, and for the sellers at low levels to keep and protect. And for the new players, we advised to sell at high significant rises if it happened. That's all for the strategy recap. We'll move on now to the economic calendar. On the economic calendar for Thursday, we'll be waiting for important economic headers to be released from different countries. We'll start with German. We'll be waiting for the German manufacturing PMI and the German IFO business climate index and the German business expectations, all to be considered as market movers. Also, there will be some economic headers to be released from the European Union as all. It's not mentioned here. From the United Kingdom, we will be waiting for the following economic headers: the retail sales for April and the core retail sales for April and the retail sales year to year for April, and other economic headers with a medium to low importance. That's all for the United Kingdom. We will be moving now to the United States. It's a big day and there are so many important economic headers to be released. We will be looking for the market composite PMI, and we will be looking for the services and manufacturing PMI for May, and we will be waiting also for the new home sales for April. That's all from the United States, and that's all from the economic calendar part. We are going now to the technical indicators. On the last trading session of Wednesday, we have had a trading range from 1,272 plus toward 1,277 plus. Numbers are rounded and the market is still opened. We do expect gold spot to print a close price above 1,273. We have to watch for this as the market is still opened. For the daily simple moving averages, the 20 days it's 1,282 and the 50 days it's 1,290, and for the 100 days it's 1,296, and for the 200 days it's 1,256. We are still below 20 and 50 and 100 days daily simple moving averages, and about 200 days daily simple moving average. For the RSI readings, for the 1 hour it's 45 in neutral, and for the RSI 4 hours is 36 bearish but enhanced from the last session, and for the RSI 1 day is 40 bearish, as same as the last trading session. For the supports and resistance, the first support is at 1,272, followed by a very strong support at 1,269.70, then 1,266 and 1,262. Resistance 1,278.85 and 1,288. That's all for the technical indicators. We'll move on now to the strategy. Let's start with the good news. We are back, and we hope that technical difficulties we have been met with in the last week are no more existing. I will take the chance to introduce you to this idea. We are a new YouTube channel, that's true, but we've been there for more than 5 months so far. And some of you by now are friends more than subscribers. I do urge you, please, to promote this channel as if it's yours. Just imagine that with the time we become 5 to 10,000 active members. By that time, we will not be only just a regular YouTube channel, we will be more of a market player, and we at times can take advantage of the price movement and deploy and perform some trading strategies which will benefit us and make us make real money. Please think of it and work on it if you believe in the cause of the channel. One more thing that some of the members have raised the idea they wish to donate to the channel or to raise some funds for the channel for in order to enhance the content of the channel. We welcome this. If you do believe in the cause and the content of the channel, you can find the link for the donations in the description of the video. Thank you guys, and we will continue our regular video as usual. As a gold trader, you do have to understand a very simple fact that gold is a non-yielding asset, and it has inherently the value-preserving quality, and it has been used as a hedge by the financial markets participants since there have been financial markets. One more thing to add also, that gold usually rallies on the back of a high demand, let's call it a seasonal demand, and it's also rallies on the back of a weak US dollar or weak equities or a rising geopolitical tensions. What happened recently, that there is a new class of assets being used by the traders as a hedging tool, which is the crypto currencies and the US dollar as a currency. Okay. So I'm mentioning this just in case you wonder why the gold prices are not rising, considering all these geopolitical tensions and economic stresses. For the trading strategy, trend is bearish and the price action is negative. We are below all the daily simple moving averages, and the US dollar is rising and in a very strong bullish setup. Technically, gold is still in a bearish setup, and we still expect to see 1255 soon. This is pure technical, and based on it, any short-term rally based on this technical setup, it should find resistance about 1280 to 85. It's a good opportunity to sell there as long as fundamentals are not changed. We talked about a set of fundamentals that we have to keep an eye on it in our last episode. It's worth to mention that those fundamentals or those issues like the tension between US and Iran, it's something like a controlled fire, and it won't help the gold to rally unless it reach somehow, let's call it a dead end. So that's all for the technical and fundamental. Now to the advice. We advise you to stay at sell and will protect your position. This is if you have a sell position at low and the market is still above you. If gold reaches below 1266, it's let's start covering our short positions and replace them with long positions about 1258 toward 1262. We will buy from there. As I said in our last episode, if you have a sell at the high, like above 1296, cover your positions at the current prices. That's all for today. Thank you guys for watching this video. Please like, share and subscribe, and I will see you tomorrow in another video.